What's going on, everybody? It's your boy C-Zar, and we are talking about Keeta today, KTA USD. It is the 14th day of December, and I'm making this video today at the request of Mark. Mark, shout out to Mark for requesting this on X. I hope you got my joke with my response to your request there. I like to be crass, okay? But it's all in good fun. Anyways, hit that like button, subscribe. Let's get into it. Okay, it is the 14th of December. Here we are at 28.8 cents with 7 hours and 59 minutes left in the day. To me, it seems as though the momentum is shifting. It seems as though the momentum is shifting, and when the momentum shifts, typically it's not something that like slowly, gradually, slowly gets bigger and bigger. That can happen. That can happen. And maybe it is April until we see new all-time highs. I doubt it. Typically, when this momentum shifts, whether it's to the upside or downside, you get a sudden shift. And then you collapse back, you find support, whatever, and then you move higher, and then you get your gradual shift that way, right? But it's not this like gradual line like this. It's like a sudden shift and then a pullback, to that gradual overall higher low kind of momentum there. All I'm trying to say here is I believe we're going to get a nice pump very soon. And I think this pump that's coming will even take us either back to this level or likely even through it. And that's like 62 cents up there. Inevitably, from these lows, I think we're on a path that will take us to new all-time highs that will be worth several dollars, multiple dollars. And by the end of this year of 2026, not the current year of 2025, but by the end of next year, we should see prices that are around $100. That's my guess. If not $100, maybe anywhere from like $50 to $100, that range there. It's a big range, but still. Let's look at the short-term stuff. We'll zoom out from there. All right, hit the like button, subscribe. Let's go. Here we go. 1 hour time frame right here. And maybe while we're on the 1 hour time frame, it's so short, let's just use Coinbase. I think Coinbase might be better. Again, we've identified that Coinbase typically does fill its gaps, okay? And there is a gap down here. There is a gap down here all the way at like 24 cents right there. There's a gap right there. There's technically a gap down here as well right there. I mean, whether it's 23 cents, 24 cents, whatever, I would assume that we come all the way back down and we fill that gap. We don't have to fill this gap. This is not a requirement. It's not a prophecy. It's not supposed to happen or obligated to happen, but typically we do fill these gaps on Coinbase on the 1 hour time frame. I've noticed that at least. Doesn't mean that we have to though, but it's just a thought there. And that thought is exactly what kept us from getting excited last time, is because we had gaps down here that we had to fill, and that's why we were bearish there. So we're taking the same kind of stance now. Looking at the 1 hour indicators, we are oversold. We are bearish on the RSI, bearish on the stochastics, and the MACD just crossed below the zero while building bearish momentum from this point here. You were dying off. You had your bullish divergence, and now you're actually building bearish momentum. You did nothing with your bullish divergence. Time to go lower. 4 hour time frame. Stochastics are bouncing right off the oversold zone. We have 4 hours left in this 4 hour time frame. It's a brand new 4 hour time frame. I don't know. Maybe we're not bouncing. MACD just crossed red. We could turn around from here, but likely we probably go lower. Okay. The MACD is actually bullish overall, but we can still go lower. We can maintain that bullish posturing and still go lower. So I mean, we can see the price again come down below 27 cents, below 24 cents even, and still maintain a rather bullish posturing overall. The 4 hour time frame. The RSI is nice, actually. I do like the RSI a lot. If looking at this here, I mean, even going back to this low here, maybe not that low. Maybe we won't take that low. We'll just take this one. From this low here and up, we do have some nice higher lows coming in line there. We're kind of at an area that you'd expect to find support. However, these uptrends typically do end once you've seen the overbought zone. That doesn't mean that you can't get back up there. You can. But if we do get back up there, I would expect we see some bearish divergence or something. It would be like a fake out. It'd be like a false move up, and then we'd move down. Although I'm not calling for that. I am maybe going against the grain here and calling for us to break below this trend line. And that should a break below this trend line on the 4 hour time frame in congruence with the stochastics looking like this and the MACD looking like this should promote prices to lower levels. I don't think we go below these lows here, but I wouldn't, if we went below 20 cents, okay, fine, whatever. I doubt that we do, but it could happen. But I wouldn't be surprised at all if we went below 25 cents. We're at 28.6 cents now, so soon enough, but not yet. Soon enough, but not yet. Daily time frame. Maybe we should pull out the all-time history chart now. I say all-time history. It's not technically the all-time history chart. It's just got more history. Daily RSI is shifting, but it's not bullish yet, right? You're in a more neutral posturing. Okay, lower lows, lower highs. You're shifting into a sideways trend, right? And you will likely shift into an upwards trend as well soon enough. But I don't know if you're ready yet. Maybe we spend another week consolidating before we move up. Maybe we spend a few days consolidating before we move up. Or maybe I'm totally wrong and we just move up right now. Or we die. But I think the most likely outcome is we probably do consolidate here a little bit, pull back down to that sub 25 cent area, back down to these low points here, find a higher low, and then we move up either later this next week, this upcoming week, or maybe Christmas week is the week that we move up. MACD, building bullish momentum. You look fierce here, but you are bearish overall. But I do like the consistency here, the building. I mean, you've literally like come down, bounced right at this area, came down, touched tips, bounced right at the area there. I mean, you're looking like you want to cross the zero on this path, maybe by the end of the year, if not sometime in January. So that could be when your big shift happens, right? Christmas week, maybe after New Year's, you're going to get that big shift up that should take you above like 63 cents. I'd very much believe that that's what happens. Weekly time frame, zooming out, there's really not a whole lot to go off of on the weekly. Probably not on the 3-day either. Some bullish divergence there on the 3-day and on the MACD as well. To be completely fair, there is some bullish divergence there, but I don't know if we've already seen that move or not. Inevitably, when we do move up, here's some areas to pay attention to. Okay, from a high to a low, notable areas of significance will be 42 cents. Let's make that more of a range, like 42 to 45 cents, something like that. And then 71 cents to 83 cents is also the next range. And then once we're above there, I mean, we can consider 130 to $1.03, but genuinely, once we're above the golden ratio, I would start to really consider $3.10 to $6.80, somewhere up in this area. That's my perspective. Hit the like button, subscribe. Thank you all for being here. Shout out to Mike. Hope you're a good sport about that. I'll see you guys on the next one. Or Mark, sorry, not Mike. I think it's Mark. Let me see. Hold on. Mark, yes, shout out to Mark. All right, take care, guys. I'll see you on the next one. Bye-bye.